Welcome to Vital RE, where we talk about real estate, mortgages, and everything in between. If you're new to the channel, subscribe, hit that like button, hit the alert button so you would get a notification next time I dump a video. Now, you probably noticed I haven't done any videos lately. I don't want to make any excuses. Let's just say I was busy, but I'm right back into it. So hopefully I'll be pumping a lot more out. We have a few things that we're going to cover today. Before that, I really hope you had a great Christmas. There's a lot more holidays coming up. The New Year's. Stay safe. Enjoy your time. Be happy, my friends. And let's wrap 2022 on a positive note. 2022 has been a woozy in the real estate market, right? Interest rates are higher. Home values they were up, they're down. Uncertainty. We're going to look at a couple different things. So let's get right into it. I want to draw your attention to this website that I like to go to, Mortgage News Daily. It's a free website. They have a paid version. The main thing I look at here is these averages. Now, when you actually go get a mortgage, it might be a little bit different. In this case, if you come here every day, every once in a while, it'll give you a general idea what the rates are doing, right? Rates went up, rates went down. I sound like a broken record. I'm going to repeat this every single video that I do. Rates do not go up and down. The cost of those rates goes up and down every day and sometimes even several times a day, which means right now, if the average is 6.5%, and this is no points, nothing to buy down, that's what they're saying. On the average, 6.5%, but in all honesty, everybody is paying for something. What do I mean by that? I'll demonstrate it really quickly. So if we're going to jump to Wells Fargo, and I'm just using a big bank as an example. Feel free to do this on your own. You can hit any bank you want. Some of them disclose information, some don't. And we're going to take a look at a 30-year fixed rate. I'm going to click on that. And the numbers that I'm looking for is interest rate. So they're saying, oh, 6.25. Let's just say that. And, obviously we have to make a note that, hey, we're doing a certain percent down. But the Wells Fargo is saying, we're going to give you 6.25. And the thing I'm looking for is points. What are they going to charge in points? 1%. What does that mean? If loan amount is $200,000 times 1%, that's what you're going to need to pay to get 6.25. And this particular example, 6.5 is free. Regardless, what I look at is, okay, today we see red. What does that mean? That means that the bond market, the 30-year treasury, changed. What that means is the paper got cheaper. Anytime the paper gets cheaper, the mortgage rates go up. This is how it works. You can kind of take a look at the other products here, the 15-year, the jumbos, etc. Highly recommend you going to this website weekly, if not daily, depending on what your interests are with the mortgage in the mortgage world. Rates have gone up. That's a fact. Everybody knows that. But my question today is going to be, is today still a good day to buy? When is a good day to buy? Was a year ago better to buy? Or is it right now better to buy? We're going to look at a couple of different ideas, and we'll take a look at this particular example here. I opened up Zillow. This is in Vancouver, Portland area. I'm in the Northwest, so just to show you where it's at, very convenient. You got 205 and you're in Portland. It's right off the freeway. Area-wise, this is a good area, okay? We're going to look at a couple different things. But before I dive in, my question is, this house that we're going to look at right now, if you were ready to buy, or if you wanted to buy a year ago, how much do you think that you would pay for this house? So right now they want $500 for it. What do you think you would buy this house for 9 months ago, a year? You would probably get, I can't remember what the rate it was a year ago, but say COVID times, right? 275, 3.25, whatever. So before we start talking about the price, let's take a look at a couple things. Now, every time you guys look at a listing, I'm interested to know, what is it that you guys look at? You guys look at bedrooms. You guys look at bathrooms. You guys look at square footage. I'll tell you what I look at. I look at price, obviously. I look at all this other stuff, bedrooms, bathrooms. We need this information to compare to other homes and other listings. The other thing I look at is, how long has this home been on the market? 9 months ago, a year ago, 2-3 days? above asking, it's gone. 102 days. This is not abnormal in today's market. This is a reality. Now a lot of people are saving it. It's winter, so a lot less volume, a lot less activity as usual. But regardless, things have slowed down. Homes are on the market a lot more. The higher interest rates are scaring people. But I'm going to scroll down. I'm going to show you something really interesting. This is the most important thing I look at. So this home was listed in September, mid-September, for $539,000. In May, June, February, March of this year, they could have gotten $540 for it. Last year, 12 months ago, they would put it on the market for $540. Guess what? It would probably go for $560, $575. That was the reality. So they go on the market September for $540. Not even a month passes by, they realize nobody's biting. They drop it by $20K, right? That's a big jump. So this agent decided to test the water. Either it was the agent's idea, either it's the seller's idea. It doesn't really matter. What matters is $20K drop. By the way, this is a random house that I know this area well. I just picked. If I pick any other home in this area, other areas, you're going to see something very similar. So I want you to go and kind of take a look. I'm sure you've heard of all the price drops. Well, this is the reality of things. People want to sell their homes in the last 3 months what they could have sold last year. That's what the price drops are. The actual home values aren't dropping. Is last year they went up like this, almost vertical, and we need to get it to where it should be. End of September, practically October, they drop another $20K. Now that's aggressive. These people want to move this property fast, right? So we don't know what the motivation of this seller is. We don't know if they live there. We don't know what their payments are. So November, almost 2 months pass, they have not dropped the price. And if you're looking at this house, what would be your move? If you're in the market to purchase a home, what do you think you would do? Would you offer them $500 or $550? Absolutely not. Right now, my friends, it's time to lowball and offer $450. Be very aggressive. Some agents are very uncomfortable to offer that low. Right now is the time. My question that I asked earlier, I'll ask again. Is today a good time to buy? For a good deal, it's always a good time to buy. What does that mean? If you're able to get a good deal, and if the home works for you, why not? I'm going to say this a couple times. Why not? If you're looking for a house, say a 3-car garage. That is, I don't know what your criteria is, but say 3-car garage, say close proximity to the freeway, say this checks all the boxes. This is a perfect house. I know it's a little bit dated. It's not ideal. Maybe you can add some value to it by doing remodel. You know, the yard is all right, not too fancy, not too big. You like the house. If you've identified a house that you like, the only job that you need to figure out is, what am I going to pay for it? That's going to be more important for you to figure out than what the monthly payments are. Now, monthly payments are important. We're going to talk about in a minute. But what should you pay for this house? If it's been on the market for 2 months, we don't know if they've been getting offers. We don't know anything until we talk to them. And we can't talk to them. Sometimes we can ask questions, and the agents are very open. Sometimes they're very closed. But if I was purchasing this home, I would open up with something like, would your sellers be comfortable, or would your sellers entertain the offer of $450? We really like it. You give them an outline based on comps, based on this. But hey, I want to give you $450. That is my dollar amount. They'll come back. You'll do a little dance, maybe $475, $485, whatever. Your job, and more importantly, your agent's job, is to figure out what is the bottom of the sellers. Is it $500? Because if the $500 is the minimum, because they have to pay off the other loan, there's no wiggle room. Move on, because maybe you don't want to pay $500 for it. But if there is, and there are tools, by the way, that I can go and take a look and see what the existing loan amounts are. And if your agent is smart enough, they can look that up. So you have more tools at your disposal. So looking at this house, you have two options. Either you come in and give him a lowball offer. And I use the word lowball because lowball is the lowball of the seller. But keep in mind, when this seller was trying to sell this property, in his mind, he was trying to get 540. It's really stupid, but this is the psychology of things. So when you come in with 450, his mind isn't from 500 to 450. His mind is, hey, I was going to get 540 and now I'm getting 450. That's going to mess with him. But don't let that discourage you, okay? Be aggressive. Look at what's out there. Look at other 3-car garages. Look at the 3-mile radius. See what's selling there. So that way when you go to these people, it's like, hey, what are you guys talking about? The other house sold for this and this much. So don't be looking at what's for sale. In today's market, you want to be looking at what's sold. Not what's pending, what's sold. Because, you know, this thing got listed for 540. It's at 500 right now. You can get into contract, for example, for 450. It's still going to show 500 pending. So it's a no good comp. You want to go look at sold comps, right? Last month, last 2 months. So those are some of the tools you can use when buying this house. So say you've come up with the price. So the thing is going to be stopping you is, hey, the high mortgage rates, right? I've already showed you, we're talking about 6.5%. Now, is 6.5% high? It's high. What is it? In reference to what? There used to be 10% rates, 12% rate. Yeah, you can argue that the home value is less. That's a separate conversation. Let's not look at the back. Let's not look at the past. Let's look at today and the future. Will the rates drop most likely? Absolutely. I would say in the next 12 to 24 months, rates will drop. Do we know how much? Absolutely not. Okay, what about the values? Would they drop or go up? This is where it gets tricky. So if you're able to purchase this house for 450, you always have to give yourself, hey, when I buy a house in the crazy market as right now, and there's an adjustment happening, there could be a 10% adjustment. So you could buy for 450. There could be a 10% adjustment, but buying a home is a long-term investment. Anytime you're doing that, you're going to win. Warren Buffett himself said, I don't know a single person who bought a house and had it for 10 years that he lost out. And I agree with him 100%. So when you're buying a house, buy and hold. Buy and hold always wins. If you have to sell to buy another, do it. But in this case, don't think you're buying a house. Don't think you're buying an asset that's going to lose you money long term. When I say long term, I'm talking about 5 years plus. You buy this house at a good price, a good deal. You're going to refinance out of it. You're going to refinance, drop a better mortgage on it. By that time, the value goes up. You pay it down. Mortgage insurance drops if you do 5% down or less than 20, right? There's a lot of moving pieces for you to win if you buy right now, even if it's a higher rate. The key is, can you afford the monthly payment? That's where the bank comes in. They evaluate your income. They evaluate everything, your liabilities. They will tell you if you can afford it. Now, just because the bank says that they can, you can afford it, and they pre-approve you based on the gross amounts, you have to be comfortable making the payments. And if you outlive this craziness, the rates drop, you refinance, you're going to be in a home that you like, which is what I started with. It's really important. Don't buy a home you don't like. Buy a home that works for you, that you can see yourself in the next 5 years. On average, every 5 years, people either sell or refinance. Statistics, maybe even 3 to 5 years. If you buy with 6.5% down, you're going to refinance maybe in the 4s, maybe in the 5s, whatever. If it drops even 0.5%, maybe it's worth it to refinance. Don't worry about that. But get into a home that you like at a price that you're willing to pay, and that's actually worth it. Somebody said, poor people say, how much per month? And rich people say, how much? Now, I'm kind of 50-50 on that saying. Part of me wants to agree with it, and part of me wants to kind of disagree with it, because when it comes to ROI, when I start calculating, okay, per month, my cash flow, but in general, when you're buying it, you want to get a good deal, right? Because price is fixed. Interest rate is not fixed. And we can do calculations all day long to figure out, like, long term of what your interest payments will be. But interest rates will fluctuate. It will drop again. You will refi, but the price you want to get at a good rate. Another really important thing that's happening right now in today's market, if you're going to write anything down, write this down right now. Sellers are willing to contribute towards closing costs, right? So if 6.5%, maybe it's free, maybe you want 6.25%, and you want to, you're going to be end up paying like maybe $3,000, $4,000, $5,000. There's prepaids, there's insurance costs, there's title, bank fees, closing costs. Let's say there's $10,000. Then there's, $10,000 to $15,000 is just closing costs, and that's typical. Then you have 5% down. Maybe it's 3% down that you're doing, maybe 3.5%. Right now, you can negotiate with the sellers so they pay for closing costs. What do you think? 9 months ago, 12 months ago, 2 years ago, do you think you can negotiate with sellers? Absolutely not. This home, the same exact home that we're looking at, would sell for maybe $550, maybe $560, way above asking, and you get zilch, not a nothing. Sellers don't care about you. Sellers market then, right now, I don't want to call it a buyer's market just yet. So maybe you don't want to be aggressive with this home. Maybe you don't want to do $450. Maybe you want to only offer $475, but then maybe you ask $15,000, maybe $20,000 in seller credits. The less money you come in out of pocket, the more you're going to be on top. Go do something nice with that money. Invest it somewhere else. Maybe buy another house. Who knows? In a year. Save it, whatever. My friends, when is it right time to buy? When the house works for you, when you can negotiate a good deal. That's a good time to buy. Let me ask you this question. If you were ready to buy 9 months ago, 12 months ago, a year ago, and you saved up 3 to 5%, it was in your bank account, rates were low, you didn't pull the trigger for some reason or whatever, and right now, the only thing that's scaring you is the interest rates and the uncertainty of tomorrow. And you have that $15,000, $20,000, that 3 to 5% down in your bank account. What is that money doing for you? Is it collecting dust? Or is it losing value because of inflation and other craziness that's going on? Do you have it in a high yield savings account that's making you no money? Maybe you put it in a CD or who knows what. Or you want to put it in the stock market. You know what's happening in the stock market. People are pulling money out right now. People are sitting on cash. They're saying cash is king and they're waiting for something. What are they waiting for? People who know something, they're waiting for something. I know people who are buying in pure cash $1, $2 million houses and they're not even blinking. At the end of the day, if you're taking notes, please write this down. Putting money in real estate is a very bold and strong move. Long term, you're going to win. Don't worry what's going to happen in a year or two. What'd you do with that money that was in your bank account? Did you go buy yourself a car, a motorcycle, some nice fancy toys, liabilities that depreciate? Buy homes, my friends. Homes equals wealth. Homes equals assets. My recommendation is every 1 to 2 years, buy the house that you desire, upgrade. It doesn't have to be a big upgrade, but get yourself a new house, rent the previous. Repeat the process. You do two, 3 times, the rents from all those homes pay for your primary residence. Of course, depending on the caliber of home that you're buying and the rents that you can get. This home right now, if you bought 2 years ago, for example, for $500 for 2 years ago, and you locked in at 3% or 3.25%, you'd have such a low mortgage rate payment that you would be able to rent this guy for $2,800 a month, maybe $3,000. Cash flow $600 to $800, no problem. So why not rent this guy out and buy yourself another one? Why not? Maybe do an upgrade, or maybe you rent the other one and buy this one. Rent, buy, repeat. That's the pattern that I like. Don't be afraid to buy a house. If you're still paying your landlord, and the key here is if you can afford to purchase a home, the bank will tell you again what you can afford, but if you can afford to make that payment, why not? Why haven't you bought? Go ahead and comment below, or just write down for yourself. Why not? Why didn't I buy this house? Give me 3 to 5 reasons why you're not buying right now. Because if interest rate is the only big thing on there 3 times, you can negotiate a price. You can get seller credits. you can really do a lot right now and get a good deal. And you can refi it later. Besides the interest rates, why not? You guys think the market is going to crash? Oh, man. From what? Low inventory? The inventory is still low. What is it going to crash? These price drops that we're watching right now, these price drops are because people expectations were as crazy as last year or two. And things are starting to balance out. Right now is the perfect time to buy. And if you do buy, worst case what? It drops another 10%. In 5 years, bam, this property is worth 600. And you have net worth, you have equity. You can do whatever. You can sell, buy again. You have moving pieces that you can play with. Don't buy liabilities until you have enough assets. Buy a home, my friends. And don't be scared of the higher interest rates because that is not fixed. The price of the home is. So I know I sound like a broken record. I repeat a lot of what I say, but that's only because it's my passion and that's what I believe. Stay strong, my friends. Buy homes, rent them, buy again, repeat. That's the only way to success. Stay healthy, my friends. Enjoy the holidays. Spend time with your family. And keep an eye on the market. You never know what's going to pop up. And you never know when moving day is. Cheers, my friends.